Hello guys and welcome to Daily Market Movements. Welcome to another episode of Indices Watch, where in today's video we're going to be analysing the Nasdaq 100 as well as the S&P 500 chart. Let's start off here with the Nasdaq 100. The Nasdaq 100 continues to rally towards the upside. We're currently trading up at 16,346. And as you may see on your screens, we've had a significant rally here since those lows that we achieved back in March 2020. In fact, we're now up 146%, which is incredible. You know, fantastic returns if you was a investor in the early stages of this rally. Of course, we have had the occasional pullback from time to time. This was last September where we pulled back 14%. I think we've also pulled back a few times this year. We've just come off a 5% or 8.3% decline here for the Nasdaq 100. But in the past month or so, we have rallied very, very strongly, and we're now up 14% since the 5th of October. So in the past month and a half, we've rallied 15%, and that has now caused the RSI to become overbought. As you may see at the bottom of your screens, if I just extend that for you, anything above 70 on the RSI is considered to be overbought, and that's pretty much where we are now. We're around that 69 level. So personally, I do not have any positions open in the Nasdaq 100, and that's why I thought it was, maybe important to come on and share my forecast with you all with regards to the Nasdaq 100, and I am anticipating for a pullback. I'm not anticipating for a pullback that looks like this. I'm not. That's not what I'm forecasting here. What I am forecasting is perhaps a move down towards the 50-day EMA, and it doesn't look very big, and that's because we've had this huge 146% rally. But if we stretch that down from a percentage perspective, even if we fell towards the 50-day EMA, that's a 5% decline, and even more so if we went back down towards a 200-day EMA, that's a 12.12% fall from the current levels, and that offers fantastic value. And it will happen. It's very hard during days like this, where we've just gone up and up. Like, look how many green days in a row. I think we were up roughly 20 trading days out of 23, which is incredible. And it's very hard during times like this to think that the Nasdaq 100 can fall, but the truth is it can fall. And it's moments like this when the market starts to become a little bit frothy. You're already seeing signs of craziness out in the market with all the electric vehicles. We had that Rivian company, which was valued at around $140 billion, and it hasn't even sold one vehicle yet. That is signs of froth. When you have a new EV company, I get it. I'm all for EV companies, but you have Tesla, which is incredibly overvalued at this moment in time. And I know that some of you watching this may argue otherwise, but if you divide their market cap by how many cars they've sold, it's like it is crazy. It's I know hundreds of millions per vehicle, and Rivian haven't even sold one vehicle yet. And you also have Lucid. I think every unit that they've sold, their market cap was valued at just under 100 billion. So every vehicle that Lucid had sold, each car was valued at around $2 billion. So this is signs of froth in the market. This is what I look for, and this is a great indication that tells me that soon we will see a pullback. And I know that we're entering into a historically very bullish time of the year. Anywhere between November all the way through to January is a very good time for the stock market, but we've already had a fantastic rally from October. Now, October normally isn't that great, but look, we've had that huge 15% pop, and you could even argue that maybe we've had November, or let's say maybe Christmas has already come early. Let's just put it that way. I'm not saying that we can't still go higher, because knowing the Nasdaq 100, we probably will. But at this moment in time, I am not interested in opening any positions here in the Nasdaq 100 as it is overbought. So I thought it would be good for myself just to come on here and share this with you all, especially if you're a new trader out there. You might just see this going up and up and up and thinking fantastic, but I personally would not say that is the smart thing to do, because we are due that pullback. And don't get me wrong, as soon as we get a pullback to the 50-day EMA, those are the areas where I am willing to add to the Nasdaq 100 and open some trades. If we got to the 200-day EMA, which hasn't occurred all the way since March 2020, well, that's an area where I would be willing to put significant amounts of money to work. That would be a fantastic amount of value, and it will come eventually, especially now that the Fed is already starting to talk about tapering. So as of next month, for those who do not know, since March 2020, when COVID really hit the global economy, and of course the US, the Fed come out and announced that they will be slashing interest rates down to 0%, which is fantastic for stocks because that means they pay less interest on their loans. And if they're renting an office or renting a warehouse, for example, there's just low interest. And then as well as that, the Fed come out and most importantly, they announced that they would be injecting $120 billion into the financial markets. So that's why every time you have a dip in the markets, if I just move this up there, every time you have a dip in the market, it's a very brief, quick dip, and it tends to get bought up. We've seen it time after time after time again, and that's because the amount of capital that is being injected into the financial markets. But as of next month, the Fed has announced on the 5th of November, so earlier on this month, they come out and said, as of next month, we are going to be slowly tapering that amount. So I think they're going to reduce it by 15 billion to start off with. And my anticipation, again, you may not agree with my forecast, but I personally believe they are going to commence to speed up the tapering process, especially as we get into Q1 and Q2 next year. I do expect COVID to slowly die off as we hit March, April next year, as the winter period is over, which is typically it is a tough time for any virus, let alone COVID virus. But as we go into those summer months, I do anticipate it to fall off, and that's when I really do believe we will start to see the tapering process really speed up. And typically what happens after the tapering process is that interest rates start to get hiked, and that is what will really damage these markets. Nasdaq 100 especially, it's a basket of very high value tech. You have the likes of Apple, which is currently worth over $2 trillion. You have Microsoft, that's over $2 trillion. I think Facebook is just around $1 trillion. You have Tesla, which is $1.1 trillion. A lot of these companies, as I just mentioned, in the EV market, they are valued at very high numbers, especially per unit sold, for the likes of Rivian and Lucid and Tesla. And as soon as these interest rates start to get hiked, you are going to see these growth stocks, because that's what they are. They're growth stocks. They're not value stocks. Value stocks are stocks that are cheap. The likes of Intel, for example, the likes of IBM. But these growth stocks, once the interest rates start to get hiked, it's going to really damage their valuations, and I fully anticipate their stocks to have a sharp pullback. And that's what I wanted to show you. This is back in 2000, I think if I show you on the S&P 500, actually, this is all the way back in 2018. So this circle here was when Donald Trump was elected to become the president of the US, and we saw a beautiful run up in the stock market for about a year. And then of course we had the financial crisis all the way back in 2008 and 2009. And we all know what that caused in the market. That was a huge decline of roughly, I think it was 57%. 57% the markets declined in those 12 months. So when Donald Trump was elected president, everything was going really well. He managed to cause the economy to really bounce back. And then that was when Janet Yellen, who was the Fed chairman at the time, or I should say Fed chairwoman, but she then announced that the US, for the first time in over a decade, will commence to hike interest rates. Because don't forget, that whole decade from 2008 all the way through to 2018, interest rates were pretty much at 0%. But when they announced that they would start to hike those interest rates, look what happened. In the space of pretty much 4 days, the S&P 500 declined 12%. It was incredible. And I'm not saying that that's going to happen exactly the same this time round, but do expect some volatility, because at the end of the day, at this moment in time, these traders, they've had a step back, and they've calculated what they anticipate these companies to be making off what their current business structure is right now. But as soon as interest rates start to get hiked, that's all of a sudden going to mean that these companies are going to be paying out more money. And then when they do those recalculations as to where or how much money that they believe these companies will be making in 5 to 10 years time, the figure will be a lot different. So that of course will affect the valuations, and hence you will see the stock prices fall. Moving over to the S&P 500, where we are currently right now, it's the exact same as the Nasdaq 100. We are considered to be overbought. I'm waiting for that pullback to at least a 50-day EMA, and if we could get to the 200-day EMA, where we haven't been trading since the 2nd of November 2020, that is an area where I really would put a significant amount of money to work, well, of course with a tight stop loss, because if we did break that 200-day EMA, it would be a problem, because you only have to zoom back really every time we've broken below that 200-day EMA. In fact, it's a great indication that tells us when steep falls may be coming. Every time we've broken below that 200-day EMA, we've fallen a minimum 15%. But it does tend to hold really, really nicely. So that is a great indication to see whether this uptrend is still intact. But you only really have to zoom out long term to see how steep we have risen. Again, just like the Nasdaq 100, let's see how far the S&P 500 has risen in the past 18 months. We're up 113%. So not quite the same as the Nasdaq 100, but that's understandable, because obviously in the S&P 500 you do have the stocks like Apple, the high value tech stocks, the stocks like Tesla, for example. But at the same time, you also have a lot of the value stocks, and a lot of these value stocks have been affected by the pandemic. Where with the Nasdaq 100, they're mostly tech stocks, and obviously where everyone's been kept at home, they've been able to still make money, where you've got everyone working from home using laptops, etc. Needing chips, so you've seen the AMDs, etc. do really well. But I thought I would just come on here today and give you an update with regards to Nasdaq 100 and the S&P 500, because they're two of my favorite assets to trade. I've made a significant amount of money over the past couple of years on both, and I thought I would just keep you in a loop, because I've had a few tweets over on Twitter saying, Max, why are you not posting any signals or any regular updates with regards to the Nasdaq 100 and the S&P 500, and this is why. It doesn't interest me at this moment in time. I have to just show discipline. But guys, if you would like to check out my streaming service, now that we've come to the end of this video, here I give more in-depth videos. So for example, the Indices Watch, this is where I post really long videos and explain my strategy. So as soon as I open a trade, you will be added to the Telegram chat once you subscribe to my streaming service, and I'll be posting those signals there. I cover the crypto markets, US stocks, I cover the likes of gold and crude oil, and also I have a learning area down here. So perhaps you're a new trader and you want to learn how I analyze and how I look at the charts from a technical and both fundamental perspective, well, then this area would be perfect for you to progress in your trading careers. But I've left that website link at the bottom of this video in the description. It's dailymarketmovements.com, so feel free to have a look. But thank you very much for tuning in for today's video, and I hope that you've learned something. Bye.